Do a video talking about kind of risk versus reward and how you should manage your risk and using risk versus reward to really tell you when you should enter a trade, what a good trade is to enter, and how you will use this to be profitable, and how you can also use this kind of system to get through your losses. So just wanted to say first, right off the bat, don't ever put your full account in a trade. You'll hear about some people finally saving up enough money where they can finally be able to trade some, and then they'll put their entire account in one trade. And yeah, I guess there is a small chance that it could work out for you, and you could make a ton of money on your relative to your account. In my opinion, especially if you're new to it, you're probably not going to be as good at it, so you have a lesser chance than you would with a more experienced person. But either way, it's just dumb. Don't do it, because there's always a chance that something could go wrong, and then you're done. You're out. You could have been very, very profitable at this. Maybe if you had been able to play it for a couple good months, but you can't even play the game anymore because you don't have any more money to play with. And so, whatever you do, just don't go all in on your account. It's just dumb. So, anyway, just wanted to get into kind of how I go about managing my risks. So, like, I'll talk about what happened when I was trading Friday with the SPY. So, I noticed that it had hit right down here 257.20 in reverse, and so 257.20 I got in again looking for the gap fill. It's a high probability trade. It usually works out. So my price target was 258.9, and where I entered was 257.20. So how do I know that that's a good trade to enter? Well, in my opinion, you want to have two reward for every one risk, at least. Now, for me, on that trade, my target was 258.93. That would have been where I would have got out, and I entered at 257.20. So, for me to calculate how much my expected reward was, and just be, 258.93 minus 257.2. About a $1.73 possible reward. And my risk would have been, say, 20 cents. Because if it breaks below 257, or I guess let's say 25, because I would honestly waited, because sometimes it can go down there for like a quick, it almost did for like a millisecond. This is why sometimes like you'll have these fast computer trades, and so like I didn't even see this. I don't always use stop losses. I manage it myself, but I'm right in front of my screen every single second. If you step away even for a minute, you need stop losses, and I would recommend stop losses for a lot of people anyway. But still, just like it came down there for a millisecond. But so that's why you do want to set your stop losses with a little bit of distance. But anyway, so my risk on that would have been, where is it? 25 cents for $1.73 reward. So, you can just do 1.73 divided by that. And so, like, I guess exactly, I have about a 7 risk reward, or exactly 6.92 risk to reward. And so that tells me that it's a really positive trade to enter. You at least want 2 reward to 1 risk. Me, I had about 7. And, it doesn't have to be exact. You could kind of tell it was about 7 just by probably doing some of the math in your head. You can obviously tell it's going to be a lot more than 2 to 1. And so that tells you, especially because this move is highly predictable, highly likely to happen, that it's a really good trade to enter. It's a high probability the trade happens, and your risk to reward is really, really good. And so what does that mean when I have a risk to reward like this? Of a 6.92, about 7. That, of course, like I said, and that just means it's a really profitable trade, but you don't even need to be right 50% of the time to be profitable in this. I don't know what the exact math is, but you probably don't even need to be right 40% of the time. It's probably around 40. But you can be right less than 50% of the time, and if you manage your risk to reward correctly, like on this trade, you'd still be profitable. And so, these you can probably predict, at least I feel personally as though I can predict the move on these with accuracy of about between 60 to 70%. And so being able to predict it well over 50% of the time correctly, and managing your risk to reward to where it's well over 2 to 1, you're going to be extremely profitable. And so, if this had went against me and say went all the way down to 256, 255, I'd have people probably ask me, are you okay? How much money did you lose? Did you lose a whole lot? I day trade, so I may trade 10 times in a day. I'd like to trade a lot more, but let's say right now I'm trading about 10. I'll probably be wrong 2 or 3 times out of the 10 that I enter. I don't really care that much. It's not a huge deal if I'm wrong in a trade. If this went all the way down to 255, and people ask me, how are you doing? Well, I probably got out a long time ago because I managed my risk. If it went below, like I said, if it went below 257.95, I'm out. I'm gone. So I don't care if it keeps going down. It's really of no significance to me, and that's why I'm fine, and that's why I've probably been doing this for a while, is because I manage my risk. So if a trade goes against me, it doesn't really matter. If it goes for me, a lot of the time it will, thankfully. But if it goes for you, then you take profit, and you're going to come out in the long run, since you have that this advantage to you. You're going to come out in the long run really profitable, and you're going to be able to play this for a while. Even if I went on a pretty significant losing streak, with a risk to reward like that, I'm going to be fine, because if I get one trade for every 6 that I get wrong, I'm still actually making a little bit of money. Let's say even with commissions, probably making a little bit of money. And of course, I'm using options, so this is very leveraged for me. You probably wouldn't want to trade if it was exactly $1.73 to 25 cents. You'd want to leverage that or either have a lot of shares. But I'm trading options, so it's multiplied. But the same thing applies. If you thought the SPY was going to move from 255 to 260, then you're probably a good place to have your stop would be 254.50, and at 260 you're looking to collect profit. So that move, if you play it out a lot of times, it's going to work out in your favor. This is what casinos do. You want to trade like a casino. You want to have, and you're actually trading better than you're actually doing better than a casino, because you have, you can predict these moves. You're probably going to be right above 50% of the time, and you're making a lot more than you're going to be right a lot more than 50% of the time, and your risk to reward is well over 2 to 1. Casinos, they actually don't have, if you play slots or something like that, casinos only have a slight statistical edge. But they just play that out with the law of large numbers. They play that out over and over and over again. In the long run, obviously, as you can see, most casinos make a lot of money. And so that is how you kind of want to use it. That's how I would use it on that scenario. And the same if I was going short. If I'd got in, if I had went long right here, I don't see any reason why you would. But let's say I'm crazy and I did. If I had went long right here, and this thing started going against me, I'd probably be out. If I went long at 259, then I would probably be looking to get out if it broke below 250 or 258.50. I'll give myself like 5 cents leeway, but I'd be looking to get out. And if I thought it was going to go from 259 to say 262, then I'd probably have about 50-cent risk maybe or so. And when it started going down there, I would get out. When it went up to 262, I would collect my profit. And so that's how I manage my risk reward. That's kind of what I use, and you can do it on, where is Apple, like long-term trades. You can do it on swing trades. Probably works out better for swing trades. I would have got in on Apple. I thought that it was filling the gap, and so I think Apple had a bad day Friday actually, but the screenshot was taken before then. I saw that right here was probably a good time to get in, and my reward was way up here, and so my risk would be down here. Probably, like if I got in at 145, let's say I get in exactly 145, I'd probably get out at 144. I'm expecting to collect profit at like 156. And so that has a really positive risk to reward ratio, and so therefore it would be a good trade to enter. And this doesn't mean that, like when Apple had a bad day Friday, let's see, what did Apple go to? This doesn't mean that, when Apple starts to, it really didn't have that bad of a day, but when it goes down, that you can't collect profit. I mean, you know, if you're in the middle right here, there's nothing to stop you with collecting profit. You know, this trade breaks down. It has such a positive risk reward that you can collect profit right here. And you know, you got in, oh, gotta click this. You got in down here and you had your risk down here at this line. Then, actually you probably wouldn't have it that low, but you had your risk down here at like 145. You know, this is still a real positive risk reward. That would have been totally fine if you had predicted it and played it that way. And really the reason, what would have been the safest thing to do is to get out. You know, that would have been the first line resistance that Apple is going to hit, because right there, and then this spot would be the next one. But if you just plan to where you have a plan where you get out ahead of time and you have a place to where you're looking to collect profit, even if the trade breaks down, you can collect profit in between. You could collect right here if you're trying to play this move, and you would still be fine. The most important thing is to manage your risk side. Have your set place where you're going to get out. When it hits there, get out. You know, think about it this way. Most people, when they first start trading, the reason they lose money is they do about the dumbest thing. And it's because, so like, if you didn't know anything, stocks really have, if you knew no other information, a 50-50 chance of going up or down from any given point to the next place in time. They have a 50-50 chance, technically. And so why is it that like 90% of people fell? Well, it's because they do the stupid thing. They'll be quick to, say, collect profits. You know, they make 5 or 10%, they'll collect those profits real fast, and then they have a loser that's down 50%, and they don't take away the loser. They let their losers run, and they take profits on their winners. It's supposed to be you cut your losses and let your winners run, but people do the literal worst thing they can do, and that's why so many people lose so quickly, or they go, you know, all in and do that, let their loser run. And you know, the more you trade, the better you're going to be. So you need to manage your risk so you can keep playing and keep getting better and better and better. And you know, if you do that, this is a very lucrative field to be in. You know, you can end up doing very well. There's plenty of people out there who have turned, you know, $5,000, $10,000 into a lot of money, and a millions really, but they didn't do it. Usually they'll do it over years. But you have to manage your risk so that you can keep playing. You know, I have a $5,000 account, a small account that I just started with a different brokerage firm. I'm going to be buying about $100 to $150 positions for $5,000 that I have in that account for day trades. If I'm swinging it, probably 200 to 400. But so even if I lose one of those positions completely, and you really shouldn't ever lose your complete position, but if I do, I'm fine because I'm managing my risk. It's just not, that's a very small amount of my account. I think that's about 2%. But I'm fine because I'm managing my risk. You know, I can keep playing. I just cut your losers. I have a professor actually at the university where I am, and I think one of his lectures, probably a dude that shouldn't be trying to tell people how to invest. He told people that he wrote a company into bankruptcy. Why are you, if something's going against you and it's been going against you 40, 50%, why are you still in it? That's bad. That's dumb. So anyway, just manage your risks so you can keep playing and you can keep getting better at this. Have a preset thing on where you want to enter the trade, where you're going to get out, and where you're looking to take profit. If it breaks down, there's nothing wrong with taking profit. I'm not saying that. But you're predicting, based on your experience, what the move is going to be, where it's breaking down against you, so where you should get out. And then if you do this and you play that out a lot of times, you will be like a casino. You will be playing a winning game a large amount of times, and you will see that your account will continue to slowly grow, and you will be adding up profit, and you will make a lot of money over a long time. But you have to be disciplined, and you have to manage your risk. That is one of the most important things in trading, and it's not really talked about a whole lot because everyone wants to go on about, like, you know, just their gains and stuff like that. Manage your losses. There's plenty of trades that I have that are exciting to talk about that are a couple 100% lately. We've been having them quite often just because of the volatility. But my losses, I'll often have some, and I'll have a win. Say last week, I think Roku that was 200-300% for me. Some people may have got more, and then this week, I think I had a loss, and it was like 5% or 3% or something like that. My winners are usually they're not multiple 100% gains, but still they're like maybe 30 to 50%. And some of these option plays is probably my average winner, and my average loser is like under 10%. So I'm fine if I have a loser. It's no big deal to me. I don't expect to win them all. And that has allowed me, since I've managed my risk, to keep playing and keep growing my account. I'm young. I didn't start off with a lot of money, and I'm doing pretty well because I'm slowly growing it over time. So anyway, that was a short video. I can go more in depth if anyone wants me to. If you have any questions, please ask, and hopefully this will kind of tell you how you should manage your risk versus reward in a kind of formula that you can use to do that.